Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Berkshire Bank CEO Nitin Mhatre. Berkshire Bank is a 175-year-old community bank in New England based out of Boston. Nitin's the CEO. He's been there for a year after about a 26-year career in banking through Citibank and Webster Bank. And he's really focused on helping Berkshire become the leading socially responsible community bank in the country. And I think it's a really fascinating discussion. Nitin and I touch on his view on the evolution of lending from early days through segmentation, through omni-channel efforts, into what he calls the current frictionless version. I think he refers to it as version 5. It was really interesting. We also touch on a phrase used, digitouch, the combination of digital experiences and more human touch experiences. I thought it was really interesting. We went through his perspective on partnerships between financial institutions and fintechs and how that's kind of the future for both banks and for financial technology companies. So I think really interesting. And then really delved into this idea of social responsibility, what that means, how they think about it, how they measure it. I think it's a really interesting conversation with a lot of insight, both on kind of the heart and soul of banking, as well as some of the nuts and bolts and execution and what's coming over the next couple of years. Lots of great wisdom in there. So please enjoy this conversation with Nitin Mhatre from Berkshire Bank. Nitin, welcome to the podcast. I really appreciate your making the time today.
Delighted to be here, Jeff. Thanks for having me.
Yeah, I was really curious to get your thoughts on, when we were talking earlier, you described the evolution of lending and where things are heading. And obviously, near and dear to my heart is what's going on in the lending space. But I'm always curious to get the banker's view. And I know you've got a number of years in industry experience with lending directly. So I'm curious how you see things evolving and where you see them heading.
Yeah, I think I've been in banking for about 26 years now, and I've seen this evolve. And I would just say we're on maybe version 4 or version 5, it feels like. I think we've evolved from what used to be, I think, pretty much a mass marketing kind of approach to lending. That moved to a more segmentation-based approach to lending, where there was more slicing and dicing, and the likes of Capital One and First USA and MBNA kind of taught us how to do it better. Segment of one, as they would call it, and then it evolved maybe in the last since the last GFC kind of time frame to more omni-channel approach. And I think that became the kind of the program or the buzzword, so to speak. From there, I think it is where it is moving to is more of a frictionless, personalized experience to lending. And that's why I say it's probably the 4th or the 5th version, where I think where it is also now evolved maybe in the last 2-3 years is, so what is defined to be frictionless and what is personalization? And it's almost like anytime the customer's at the point of consideration, whether it's when they're walking to a branch or looking up on their phones or reacting to a communication, or they're shopping, right? And that's why you hear the likes of BNPL now becoming the thing now, because really, I mean, buy now, pay later is not a new concept. Credit card is not a new concept. It's been there, but I think what BNPL's done is at the point of sale, it just translated that whole program into a simple button. So that button is what I think is making the difference. So I think that's where I think we're in version 5 of lending. And it's exciting. And I think what you at Upstart are doing is adding that element of AI, which I think is going to make it even better and make credit more accessible to consumers, which I think is a real need in the market.
Yeah, I tend to think of AI as a technology that delivers on your message of frictionless, right? How do I make the right, easiest, frictionless process for people? I want to go to version 4 of lending and ask you a question, though, because I feel like, so you're version 4, if the kind of frictionless, maybe AI enabled is version 5. You talked about omni-channel. Where do you think we're at in the omni-channel journey? Because I still feel like almost every institution I talk to is trying to get omni-channel right? They're still, I think we all know it's something we need to do, but the execution and delivery of a seamless multi-channel experience is still, at least in my thoughts, like not fully delivered by the industry. Where do you think we're at? And it's not uncommon for like one technology to come in while we still haven't like really digested the last one. But where do you think that we are at, and what do you see coming from an omni-channel perspective? Because I feel like that's still something I hear a lot of people asking and talking about.
It is, and you're so right. And I think there's a very, very wide dispersion in terms of how you define that experience to be. And I think at one point, and maybe that's still a little bit of a dream for the industry, is where omni-channel could be independent of what channel the customers are operating in. The experience is seamless to the extent that you could drop off one channel and then enters channel two, and it kind of carry on that experience, and then drop from there and go to channel three, and it's the same continued experience. I think where things have evolved, in my view, is most, I think, institutions have struggled to truly connect that seamlessly. So where I think it is kind of settling potentially is to say that, okay, let's just make sure, independent of what channel the consumer is operating in, that experience is seamless. And then if there are connectors that can be built, that's great. So I think that's where we are. So omnichannel is still alive, but I think how do you make that frictionless is where it is evolved. So make that process as smooth and fast and easy and convenient and personalized and transparent and flexible as possible. And then what you add as an overlay along the way is make it more kind of advice oriented. So throw in the elements of, here's the best thing for you to do. It's not just we're just responding to what you asked for, but here are the different options for you. Here's what works best for you and your situation. So I think that's going to be the differentiator.
Yeah, that's maybe one of the most common themes in my guests is the value of the advisory role and how we can shift our human interactions into that. I also want to ask on the frictionless, how do you think about delivering on that? Because I feel like there's an element of that that's technology oriented, and there's an element of that that is process requirement. Oh, the loan file needs these 35 things. And so some of it is actually like our own policies, procedures, processes. And some of it is like the technology to actually automate that. How do you think about the kind of two parts of delivering on an actual frictionless experience? Or am I missing some? But it feels like it's not just a technology thing, right? It has to be more than that if you're really going to deliver on that promise to the consumer.
It is. And I think I would even add there's a people and culture element to it. So I'll start with technology. I think technology clearly is making the difference. And I think the evolution of where the banks have been and the reliance on the core systems and now more API-enabled systems that are certainly playing a role. And then you throw in AI and RPA and machine learning on top of that. I think that those are clearly changing the paradigm there. You're exactly right. But even with the greatest of technology, if your processes are designed to be cumbersome, that kind of gets in the way of becoming frictionless. So if you're still going to have paper-based processes in the middle office and the back office, then that doesn't lend to a good solution. So I think there is a lot of process re-engineering, automation, and there are components of machine learning and RPA that gets thrown in that space as well. So that work is, ongoing. I would also say there's a little bit of people and culture element that I think sometimes gets forgotten, that banking as an industry is evolving to a place where it's all about what the customer's expectations are. And I think the work that you're doing and, everything that, the Amazon and Apples and Googles have done is just reset the bar for the banking industry. And I think some part of it is also helping the bankers and the employees of the banks understand that we have to now operate on a different standard because that standard has been reset for us. So I think it's that same people, process, technology, all of that comes into play to get to a place where we want to be. I've been a huge advocate of this, Jeff, is I also believe that some part of this will have to come through partnerships. Because no matter how hard the banking sector tries to, contemporize itself, there will be better kind of platforms, and whether you call it a platform as a service or banking as a service or loan origination as a service, would be really viable with the like of Upstarts. And that's why I'm delighted that we partnered up with you guys recently and, learning from it every day.
Well, we're delighted that we've partnered with you as well. I'd love to delve into that partnerships thing a bit. I mean, part of me always thinks that this partnerships are new in finance is weird because, there are technology partners that you've had for years, be the core providers or mobile technology providers. But how do you think about how the bank needs to adjust the way it operates or thinks or executes in order to really be well positioned to take advantage of partnership opportunities? I guess in my experience, a lot of banks can't get out of their own way when it comes to actually being able to partner. And I'm curious how you think about setting the institution up for being able to take advantage of the opportunities like that where they exist.
Yeah, I think in my view, there is no choice. You have to be partnering because no matter how hard you try, you're never going to have the capital to be building the most state-of-the-art platforms that some of the partners would have, number one. Number two, no matter how hard you try, there's always going to be better mousetraps for marketing that, even including companies like yourselves have built that is more effective and efficient. And the third part is where you should not lose focus, however, is you want to own the customer and own the customer relationship and own the totality of the experience. So on an average, a bank and a consumer side provides about 12 to 15 different types of products. And if you are able to make sure that the experience for the customer is integrated well through a good architecture behind it, then I think you still continue to manage and own the relationship and own the experience and the totality of the experience and single view and single sign-on and single pane of glass. I think that's your ultimate experience. So I think partnerships are going to be important to create new customers, deepen relationship with customers. But at the end of the day, what you own is the experience, and I think that still can be done. So sometimes I think, like you said, we get in our own way because there's this fear about losing control if you go through the partnership route. And to me, the control is managed at the customer experience and the totality of experience level.
That's fascinating to me. And I think particularly your point on where you really have the focus on stitching together and integrating pieces and parts, because I feel like that's, even for institutions that own all their own infrastructure and like we're going to build it all here, that's often not well executed. I've seen, I won't name any names, but I've seen institutions that wanted to use their own depository information in their loan origination system and had to use a third party, external service to connect them because they couldn't tie the dots. How do you, it's an interesting thing to say our focus isn't on building the one thing, it's on tying all the things together. How do you think about the investments you make or how you prioritize that and set the institution up to do that? Because it's kind of different than saying we're going to build customer experiences like an LOS and saying, hey, we're going to make sure that we're layering, I'm guessing on top for the customer and internally, the kind of piping between these things, which is a really fascinating, different way to think about when the institution is really delivering directly from a technology point of view.
It is, and I think that's the exciting part that's happening right now in the banking sector. And I think things like, seamless integration and having the architecture for it is relatively new for the sector. I think we've always had some architecture, but to do that from the perspective of stitching together all of the experiences in one place, so everything that the customer has or does with the bank is able to be viewed and transacted and onboarded and managed and collected on is in one spot. I think that's a new paradigm for architecture. And I think there's a lot of work that's going on there. The evolution of APIization, if I were to use that word, has been phenomenal in the last 3 to 5 years. And it's made, the likes of MuleSoft that have made it almost industrial grade has made it so much easier. And then, other things like, the Plaids of the world have made access to data beyond your own walls of a banking system, right? So now you have access to the other parts of the information. That has really made this exciting. But I think it does boil down to having the right business model and then having the right architecture from a technology perspective to stitch together all the experiences, including the experiences that come through partnerships, is going to be the exciting and yet challenging part for the sector.
But it's a huge opportunity because my experience is it's not, there's a lot of room to be best in class here because it's still in the infancy of really being delivered. You mentioned people earlier as like a key part of when I was talking about, kind of some of the other elements you're working on. How do you think about, I think it's fascinating. I've worked at, the oldest company I've worked at was IBM, I guess. But when I went to Google and Upstart, they're relatively young organizations and they can their culture is as yet somewhat unformed and built in the modern era to solve modern problems. And you have institutions, I think you guys are a pretty old institution, and you have a lot of culture that's steeped in history. How do you think about transforming the people and the culture and the way they tackle problems to match a different era? Because that's like a different challenge for a bank that has history and stability than it is for a little tech startup that's got 20 people. Go, culture is whatever the heck we do. And here culture is something different. So I'm really curious how you think about shifting the processes, but more importantly, the culture about how people think about problems or how they interact for the new world.
Though it is a great question. And I think no matter how much we evolve from a technology perspective, there is still a significant element of the business that is still people oriented. So you're right, we're an old institution, we're a 175-year-old institution. And with that comes the strength of being well known in the communities, having the trust of the communities and the customers, and having the longevity of the bankers who've known the customers over not just years, but in some cases decades, right? So I think all of that is an advantage. And where I think we could, scale that advantage up is by saying the way we deliver solutions to customers has to change. And that obsession around customer experience has to be felt across the organization, not just in the front line, but in the middle office, in the back office as well. And that's what we're creating here. And that's the part that excites me every morning coming to work, saying this is a new era for us in terms of retaining what's great about us, which is that relationship and personal touch, but then overlaying the customer experience and digitizing the enterprise at the same time. And we internally refer to as the DigiTouch organization. That's what we want to become. And I think that's where
DigiTouch.
Yes.
DigiTouch. What is that? Break that down for me a little bit. What does it mean to be a DigiTouch organization?
So it's the digitization of the experience for the customer while retaining the personal touch of a community bank. So that's where we're combining that DigiTouch here.
I like that. How do you think about are there times when you want to be more digital versus more human touch? Are there kind of things that are being done? Like, how do you think about when and where each of those is the relevant way to be interacting with your customer? Is it the customer's choice? Are there areas where you're more focused on high touch? Like, how do you break down where you want those boundaries to be?
I think the simple answer for that is it's defined by the customer, right? The customer is defined how they want to interact with us. The important part of that is, and I think sometimes I do feel that gets missed by some of the challenger banks or neobanks, is they've created exceptional mousetrap for a digital experience, but there are times when things don't go well and customers do get stuck, and that's when they want the hand-holding, whether it's through a phone call, through a chat, or through a visit to the banker that they trust. That part has to be exceptionally smooth, and I think that's what we're retaining here. So we have to educate our bankers, and sometimes you just take things for granted. So you could easily just tell, everybody in your branches, for example, that, hey, help customers use mobile banking more often. But that seems like such a simple thing to do, but it's more complicated than that, because now you have to make sure all the bankers know how to use mobile banking. And then within that, you want them to know, hey, and you do it on Android device and iOS environment and so on and so forth. So multi-screen, multi-OS kind of education, had been taken for granted, I would say, for a few years by the sector. So we're trying to fix that and saying, okay, we're going to educate our bankers, invest in our bankers, make them comfortable with online banking, mobile banking to begin with, and then using tools like Salesforce.com to see the totality of the relationship in one place. So I think a long-winded way of saying it's driven by the customer, but facilitated by investing into the bankers who can help the customers when they get stuck.
Yeah, I also hear a lot that it's not just when customers get stuck, but the transactional element can be pretty digitized, right? I don't need to walk into a branch to deposit a check or make a withdrawal or whatever it might be. But that there's still a component where most of us need help figuring out what the right financial choice. Do I need a 401k or an IRA? How do I want to invest it? Do I want a fixed 30-year, a 15-year, and aren't like, what's the mortgage product I want? Those are difficult choices that I don't think we help people navigate well digitally. And I feel like that's where people go, I don't know what to do. Help me figure out the right choice. And then once I've made it, I don't need to sit here while you type my information into the screen in the branch. Like I'll go apply for this thing on my phone, but I want the help like figuring out what the choice is that I should be making that's best for me. And I feel like that's the thing that the neobanks or the digital only folks really struggle to deliver.
It is, and I think this is such an important need. And outside of my day job, I also am on the board of Junior Achievement, and we're talking increasingly about making financial literacy part of the curriculum at the school level itself. I think it's a real need across the nation. And when you hear stats around how, half the Americans can't afford to bear a $500 of emergency expense, that kind of goes back to show here we are the greatest nation on the planet and we are struggling financially because there is no real good source for advice for many of our consumers in the country. So we have an advantage as a bank because banks are trusted and we have trusted relationships, and now we need to make sure that that advice is delivered seamlessly across any channel to the customers. So, working with partners such as yourselves is going to make it easier for us.
Yeah, I love that message of financial literacy. It's something I work on with my children, but it blows my mind how many people call us and don't. This APR, does that include my origination fee or is it just the interest? And I'm going, man, it's like the definition of an APR, so just the understanding of compound versus simple interest. It's really amazing. It's difficult to understand how we expect an American consumer to make a smart financial choice when we haven't given them the tools to really understand those choices in a consistent way. So it's a huge gap, I think, in the space, and it's really cool to hear that that you guys are thinking about that through Junior Achievement. And I struggle with how to teach that to my kids. I feel like I learned it all from the School of Hard Knocks, what little I might know. And but it's such a vitally important thing for people to understand it and make good choices about.
It is, and I don't mean this to be a plug for ourselves, but we did when we launched what we call internally to be BEST program, which is an acronym for Berkshire's Exciting Strategic Transformation. It's really our strategic plan to transform ourselves for all the components that we talked about. But we translated that BEST program into what we call as the BEST Community Comeback. And what that means is it's not just about, how we're going to improve financially and improve customer experience and our ESG kind of delivery, but also how it helps the communities. Part of that includes financial literacy, and we have set targets for how many hundreds of thousands of customers that we would make more financially literate and aware as part of this program as well. And that's the exciting part because you have to, at the end of the day, feel that you're doing well by doing good, and this program helps us do that.
That's I'd love to delve into that a little bit because maybe one of my biggest learnings is somebody who came from the technology space into the banking space. I guess my pictures of banks are a little more Wolf of Wall Street and a little bit less, It's a Wonderful Life. Yep. And I think I've been really surprised that when I don't want to say that there aren't bad actors, but that the community banks, the consumer bankers are very different than what you think of as the kind of Wall Street type investment bank, or that are really transaction oriented, and the mission orientation of most of the community banks and the consumer bankers I've spoken to who really get into the business to help people. It really was, maybe it shouldn't have been, but it was a little bit surprising, and it was kind of refreshing to see how much people are focused on that mission. I'd love for you guys have talked about being, a socially responsible community bank. I'd love for you to talk about what that really means to you and how you think about measuring your impact in that way. Because I think it's something people need to understand more, like how much banks really are focused on helping their communities, helping their consumers, be better positioned financially versus what many may think of when they think of, kind of Wall Street and quote unquote bankers.
Yeah, and I think what that means for us is going beyond the baseline expectations that have been set for the banking industry. So, who do you lend to and what you do on the CRA front and so on and so forth is fine. And we do that not because we're obligated to do that. We do that because it's the right thing to do. But we're saying we're going to go way beyond that, and we're going to get into a place where we're going to create financial literacy as part of our community comeback. We're going to make sure that there is better access to credit. to the consumers that need access to credit. We're going to make sure that we're going to be transparent in everything that the customers do with us, whether it's opening a banking relationship or planning for their future retirements and so on and so forth. So that would be there. And then the other part is also some part of that socially responsible community bank is also to make sure we're playing a vital role in the environment. So how do we facilitate more low carbon financing? How do we make sure we ourselves become, net zero on the carbon and, greenhouse emissions, and what do we do about it? And I think you made in passing, you talked about, it's like it's a wonderful life. And we do, and sometimes almost half jokingly, we talk about how we want to look at ourselves as the tech savvy version of George Bailey, right, from It's a Wonderful Life. So I think that's the persona we inspire ourselves with every day to become. And you're right, there's about 4,900 banks in the country. And there's always going to be some or the other entity that has a footfall here and there. But by and large, most banks are really delivering value to the society. And it was actually very evident when the banking sector provided PPP, the government program, that I think has saved millions of jobs through this COVID cycle and helped, hundreds and thousands of businesses stay in the business, which otherwise they would have gone out of. So I think it's a long-winded way of saying there is very structured program that we have built here to live up to our promise to become that leading socially responsible community bank.
I love it. What are the kind of measurements you take? Particularly, I'm curious on the financial literacy, how you think about, if you're achieving goals, because it's one of those areas where it's hard to delivered courses, people really understood, people got out of it. Have you found interesting ways to measure the impacts you're trying to make? Obviously, carbon neutrality is one that's a pretty straightforward measurement, but how do you think about measuring your execution on that, socially responsible element?
There are multiple components to it. I think on the environmental side, the carbon financing, the carbon stature itself, greenhouse emissions, and so on and so forth. And then on the social and the consumer side, access to credit, how many sessions or financial education that we did, how many accounts did we open that are socially responsible, and there are some products that are getting the endorsement at a state or a national level to be the more accessible products. And the one that we recently launched about a few months ago that has a certification called Bank On certification. So I think products like that. And then eventually it all accumulates into how many individuals and households did we positively impact through financial literacy.
That's awesome. And it feels to me like this is a great moment for that focus, because so many of those products, like whether it's accessibility of credit or kind of a lot of the products that your consumer who maybe can't put their hands on $500 easily need are so hard to deliver because of cost. And the technology is now becoming available where when we execute right, we can actually expand access to credit through better underwriting capabilities. We can expand product availability through lower cost bases through automation, and actually, make things available that can be really beneficial to consumers, or things that were really hard or expensive or loss making to deliver. So it feels like this really great moment for that focus, because the technology is now here to really help us be able to deliver in a more real way on some of those things that we maybe wanted to do before, but were, prohibitive in certain ways.
It absolutely is. And I call that democratization of technology and access to that technology that's available to a 12 billion bank, asset size bank like us. So now we don't have to worry about, hey, the largest banks are spending, 10 plus billion dollars in technology every year. And how do we compete with that? And how do we drive down our cost to serve? Now you can, because we have partners such as yourselves that will help us do that at a low cost to serve, and to that extent improve the access for customers who need it most.
I love it. Well, I always have my 3 questions that I ask everybody when I end this podcast. So I'll ask those, but before I do, I just want to ask, is there anything you wanted to talk about or thought we'd cover or feel like I missed that you wanted to go through before I jump into those?
I think we covered it all very well, Jeff. I think this is thought-provoking, certainly for me, and glad that we had this conversation, because as you can see, I'm very passionate about this, and I think I say this on behalf of all 1,500 odd bankers that we have. We are excited about this journey, because I think this really, puts us on the map of being that leading socially responsible community bank and doing well by doing good, and feel good about what you do every day. So no, I
Yeah,
think you've
it's
covered a lot.
yeah, that's the thing we always love. We every Friday we read a review from a borrower at our all hands meeting, and I think it always helps us keep centered on, it's easy to get caught up in the numbers and the metrics, and this line's going
Exactly.
up and that line's going down, and what's right and what's wrong, and then when you come and say, "Hey, I couldn't do X, and now I can because of you, and thank you," it helps keep you grounded on what's important and why you do what you do, and I think it's so crucial because it is so easy to lose sight of. If you're not a frontline staff member talking to customers every day, and it's that keeps at least me grounded in what we're doing.
Brilliant.
All right, and here are my three final questions. We'll do kind of rapid fire.
Sure.
What's the best piece of career advice you've ever gotten?
Uh, Always ask the question. Is the
Oh,
question.
good. I'm going to play this episode for my son. I've been harping on him on this particular point. Always ask the question.
Yes. And the best case scenario when you ask a question or ask for something is you get what you want. And the worst case outcome is you don't get what you want, but you now understand why you didn't get it. So I think always ask a question, always be curious. And I've seen people, and I've advised that to many of the team members, especially the younger ones, that don't just show up to a meeting and just walk away after the meeting. Be involved, be curious, ask questions, because that's how you learn, and you also unknowingly create value for the people in the room as well.
Yeah, that one is also so true. I think it's two sides to your advice. I want to make sure people see both. One is like when you want something, you got to. I think one of the VCs around here says, if you don't ask, you don't get.
Yep.
But the other part is, I think that you're saying is like when you ask questions, because I see this so many times. Like I'm in a meeting, I don't understand, and everybody else is nodding their heads, and I feel like the stupid person. And then after the meeting, everybody goes, "Jeff, I didn't understand that either. Thank you for asking that question." Well, why didn't you ask the question? But there's a lot of value you create when you're willing to say, "Hey, can you explain this to me? I don't understand this, or I want to dig more in that."
Yep. And the one component of that is, which is what I tell my children, is just never stop learning, right? You stop
Yes.
living when you stop learning. And I think every day, and I'm over 50 years old, but every day I ask myself, did I learn something new today? And when the answer is yes, I feel good about that day.
Did you learn anything particularly new during the pandemic? Then did you pick up any new hobbies or activities or things you tried to learn while you were stuck at home for a year and a half?
I thought of learning new languages, but I've miserably failed in that, and I'm behind on learning Spanish and Mandarin. So I'll make that my New Year resolution. How about that?
I've been trying to learn Mandarin for years, and I can tell my wife I love her, and that's about as far as I get. My second question, what's the best piece of advice you've gotten about consumer banking or consumer lending?
I would say, if I were to paraphrase the advice, is uh, there is enough of the opportunity for everybody to play a role. So partner up with people, team up with people, share best practices. I think it makes everybody better. And that's why I was really excited to be on the board of Consumer Banker Association, and was the chair of the board in 2019 and 2020. I genuinely feel that there's enough need out there that everybody could play a role and provide better access to consumers. So I would say that's the best piece of advice. There's enough market for everybody. Let's all work together to provide the best solutions for clients.
I like that. That's a good one. And then my last question is, what's one bold prediction for this? Is my I'm going to bring you back in a year and see, or 5 years, see if you were right or wrong. What's a bold prediction? It doesn't have to be finance or banking related, though it can be, but a bold prediction for the future.
Oh, I think the bold prediction, and maybe this is up your alley here, is I think AI is going to transform the way we do things. I think artificial intelligence, or I like to refer to as augmented intelligence, because I think it's not going to necessarily replace humans, but it's going to augment the things that we do in a very, very different way. It's going to be a different world. I think it's going to be a better world for it, as long as you keep the guardrails and use it wisely. Uh, just going to be a better world for using technology and AI as we move forward.
Yeah, it's such a great point because I think there's an old I think it's Arthur Clarke quote that said we overestimate technology in the short term and then we're disappointed, but we underestimate its impact in the long run. And there are a handful of technologies that totally shift the way we operate. I mean, I think about like an Uber and trying to tell myself like pre-internet,
Yeah.
like like no cell phone, no, like what Uber, or they don't even make sense. And I think AI is on that order of technology that is just a fundamental leap forward in capability, and we're only beginning to understand how it can actually transform and impact the world. But it's going to be a big one. It's going to be on the order of, I think, mobile and the internet in terms of the shifts it has. All right. Well, this has been a fascinating conversation, Nitin. I really appreciate your joining us today. I've greatly enjoyed it.
Delighted to be here. Thank you, Jeff. Have a good one. Happy holidays.
Happy holidays.
Take care.